Hey, good evening, everyone. It's Russ Nesovich with Nesovich Law. I just wanted to come to you this evening. I've been thinking about a topic that I thought would be interesting and relevant to some people. And one of the things that often comes up that I find is one of the most misunderstood accounting and estate planning topics that I wanted to explain to you this evening is the gift tax. So most people are aware or think they're aware that if you exceed a $15,000 gift to anyone, whether it be someone in your family, a friend, anyone at all, that gift is taxable, whether taxable to them or taxable to the individual. And that is actually the individual receiving it. And that is actually not true at all. So let me give you a brief explanation. One of the reasons that people often give gifts is to get money out of their estate for estate planning purposes. So if you have, for example, a husband and a wife with 2 kids, the husband can give $15,000 to each of the 2 kids, or up to $15,000. The wife can give $15,000 to each of the 2 kids, or up to $15,000, without any tax liability. So they can give $30,000 to each of the 2 kids between the 2 of them in any given year. Now, what happens if they give more than $15,000? Well, most people think that if they give more than $15,000, it's taxed in some way. And that isn't entirely true. In fact, it's really not true at all. What really is the case is that if you give a gift of over $15,000, that gift is reportable to the IRS, and it's reportable through a form called a Form 709. And it's reportable because the IRS wants to track the total of all the gifts that you give in your lifetime to make sure that you don't exceed your lifetime gift tax exemption, which currently is $11.5 million. It's actually a little higher than 11.5, and is a number that will fluctuate with the tax code and the laws that Congress and the president passes. So there's historically that number's been lower. Right now, it's one of the highest it's ever been. It's over $11.5 million. So if over your lifetime you give away more than $11.5 million for an individual, $23 million for a couple, there will be some tax due. So by your estate upon your passing, if your estate, when you pass, has more than that $11.5 million amount. So if you've given away, say, $5 million, you pass away, your estate has $6.5 million, the total is still under $11.5 million, there's no estate tax due. But if you've given away over your life $10 million and you pass away with another $10 million, well, even though that's below the $11.5 million exemption, the totality of the 10 plus 10 is 20, and that exceeds 11.5. So there's taxes due on that amount over 11.5 million. So when you give away more than $15,000 in a year to an individual, there's a reporting requirement with the IRS so that they can keep track of all the gifts that you've given over the course of your lifetime to make sure you don't exceed that lifetime gift tax exemption. However, you can give away any amount that you want in a given year to an individual. And just because you gave the amount away, it's not automatically taxable. Most people think it is. So that's one of the biggest misconceptions that I hear and see when talking to people about estate planning, gift planning, even their charitable planning, their accounting in a given year. Keep in mind, you can certainly give away more than $15,000 to an individual in a given year. It's just reportable. It's not necessarily taxable. Thanks so much. If you have any questions about that or anything else, leave me a note in the comments, send me a message. We're happy to answer questions that you may have going forward. And as always, thanks so much for listening. Take care.